Hey guys, welcome back to the channel. I haven't done a video in a very long time. Finally got a check back from the insurance. I replaced a bunch of my broken computer equipment that was basically flooded with water, and I set up a new studio upstairs as well. I've been working on a few things trading wise. I've been really kind of focusing again on day trading, but the thing is the market is totally different now, you guys, than it was when I was a better trader 2-3 years ago. And I will say this, it is going to be significantly more difficult now more than ever to make a profit. I've dropped size down very low. I want to talk about some trades that I've taken over the course of this past week. I've been trying to get this video out since December, but every time I go to try to produce the video, it always comes out bad. I hope I can get this one out to you guys. I kind of want to do this a bit differently, go over the trades I've taken, biggest win, biggest loss, anything exciting. But I've been working on a different type of trade, and I kind of want to show that to you guys now. And one of the main reasons I'm kind of forced to look at different trades right now is because the market's totally different. So over here, we have NVIDIA, and I'm grabbing it on a breakout. It's Tuesday morning. Markets opened for New Year's, start of a new year. And NVIDIA looks like it's trying to break out. It kind of gapped up a little bit in the morning, and I went long NVIDIA. I grabbed 200 shares, and immediately I kind of feel like I made the wrong decision. It's very early to take the trade, to be honest with you, but it did look like a bullish formation was happening. So you can kind of see NVIDIA's trying to break out right now. But I realize that this trade is probably going to fail, and I am taking off 100 shares relatively quickly after coming to this realization, as you'll see right here. So you'll notice on the top left, I had a failed sell order. Didn't look like I got filled in time after I realized I made a mistake. And that's the key thing with this market right now. There's a lot of what I would call as wick backs, meaning it looks like it's going one direction, but we have such a large wick back, it is very difficult to take any trade with a convicting size. NVIDIA's really struggling to break out here, and I know I need to try to get out of this trade. Let's see if I can play this a little bit faster. Okay, so it's breaking out here. I take off 100 shares. I'm not going to risk it. It's not that convincing move higher. It looks like it's, as you can see, this bar is trying to break higher. But there are sellers stepping in. So I just take off the rest of the NVIDIA trade as a result. I am finding right now that normally, 2-3 years ago, that's a trade that I would have taken probably with a decent amount of size. NVIDIA would have probably ran a lot higher. Right now, there's not the same level of follow through on the market. This is additional footage for later on in the trading day. Let's bring this up on full screen here. And what you can kind of see is NVIDIA actually sold off pretty hard. This is what I call a wick back right here. If you follow my mouse, this is what I call a wick back. Whereas the direction still looks like it's higher, but because it's dropped so much, it's hard to go into the trade with size. And that's kind of what I am finding the current problem. I take another shot at a long in NVIDIA because the direction is still higher. Maybe this is a wick back. I got out of it through the wick back, and I'm taking another shot at a long here. And that's what I mean with my trading style has changed a lot. I have really been dropping size while practicing a more nimbler approach to trading, which is I'm constantly getting in and out of the trades. I didn't hold NVIDIA, if you guys saw the footage from earlier, through these blocks here. I let these blocks take place because I noticed the level 2s were not just getting jammed with buy orders. And I basically, when it got to this point, I decided to take another shot at it. In hindsight, I probably should have gone in with even less size than I did. I know 100 shares of NVIDIA is not that much size, but you can see that this is not a high conviction trade on my part. This is, I would have said it was better than a 50-50. But because I am confident I could have gotten out of the trade at a good time, which I did. I got out of NVIDIA as it was seems like there was a potential it could roll over here. And this wasn't a wick back, but an actual change of direction. I had decided to then, close out the trade. I shorted Tesla mainly because Tesla has been the short candidate. I don't want to talk about off-topic things of trades outside this video. I do have a short position on Tesla altogether. But I'm really focused right now on the day trades. Now, the Tesla, it seems like this was maybe in hindsight, and I was saying this to myself, not the best while going through the footage to add to my short. And one of the main reasons I say this, although all of the charts in the market now look like they're about to correct, Tesla had this candle right here where it dropped lower. Let me pause the video for a second. It drops lower, but then this candle gets essentially bought back and it closed in green. So this means that there's a chance that there's a lot of buy orders, at least on an intraday basis at this point. May have not been the best time to take the short position. Having said that, I have a lot of different charts up, and these charts are a great way of keeping track of the overall market, a lot of the volatile stocks. That's one of the main reasons I keep a lot of charts up, is a lot of times all these stocks are correlated in one way or the other. Even if a stock is strong for the day, it's still going to sell off a bit when the overall market's selling off for the day. That's why I keep a lot of stocks up. Obviously, SPY being on the bottom right, you can see the market is trying to correct. SPY being an overall gauge of the health of the overall market. Anyway, let's run the video in 2x. So yeah, looks like I took a short position on 200 shares of Tesla at this point. And in hindsight, this is not the best spot to take the short. I should have waited for a clear break in this candle before I took a short on Tesla. With this level of size, Tesla, it has ridiculous wick backs of 4-5 points. And yeah, I decided to take off the rest of my Tesla mainly because it was, I was worried that the market would rally here or kind of reverse a little bit. So I figured it was a good spot to take the Tesla off. I added a few other short positions in Meta. I think in hindsight, this was a mistake. I shouldn't have done this. This is actually a good point where the market could rally. When I was up just even a little bit on some of these trades, I think I took most of them off. Okay, I want to talk about my CRM trade. My last trade, I talked about NVDA, how I picked it as my long candidate for the day. And the reason I picked it for the long candidate of the day was it was up pre-market, looked like it was going to continue to run, and I wanted to kind of join in. That's what we're trying to do as day traders. I picked CRM for the same reason on this day. It was up quite a bit. It's up 4 points. You can kind of see it has gapped up on the day here. That's why I had picked it as my long candidate here. So right as the market opened, it's selling off. I didn't grab it right there. I don't think I grabbed it near the highs. I grabbed it actually around 139 after it's already sold off quite a bit. So I grabbed it right around here. Okay. It was up as high as 141, sold off a little bit. Great spot to try to attempt to bounce this stock as it's a great long candidate. That's why I picked CRM. I'm also picking Meta. Meta has been strong as of recent after its huge drop to $88. As you can see, CRM is not having that follow through. The other longs, NVIDIA, Tesla, it was kind of a day where, yes, it's you can make the argument that, hey, it was already gapped up a lot. What were you expecting? But then it kind of sold off a lot. I thought it was still the best candidate if I'm trying to place long trades on the market. And of course, I have SPY here that I'm kind of tracking to really decide whether I pick long candidates, short candidates, things like that. Still kind of going in with small size. I think my biggest mistake was adding size to CRM. I really don't know why I did that. The moment I added size, it basically, it's now a good time to get out of the trade. I got out of my other longs, MU, that wasn't really moving. The stocks that had gapped up a lot were the ones that were really correcting today. And then I went ahead and took off CRM completely. And then I feel like I made a mistake here and I short sold CRM, and then I just quickly decided on covering it. So you guys can kind of see what I'm talking about with wick backs. There's no follow through in direction. in this market. And this is what I've been noticing. This is why the market is so hard to trade now. In the last year, I've never seen a market so hard to trade before. And with the liquidity coming out, there's just no follow through in either direction. And you can, I'm not really talking about any trade in particular here, but you can kind of see most of these are moving directionless. And for that reason, I had to move to a slightly more nimble style. You guys can see I mounted a comeback. I made some money, but yeah, that's kind of what I wanted to talk about, is these constant wick backs with not really a tradable direction for day traders, which kind of forced me to reinvent my trading, and I'm trying to reinvent it with very small size. This is a day that I want to talk about a different type of trade. If you recall with CRM or NVDA, I was taking the directional trade of the day, meaning I'm following the trend. If the trend is broken, I'm getting out of the trade. On this day, this was Friday, I am trying a different type of trade. I would kind of rate it close to like what you would call a washout long. Now, I noticed a potential for an opportunity. Okay, this type of trade that I'm going to talk about is a washout long. So what is a washout long? It's essentially when a stock that is that you're trying to long has dropped so much from a point where you think the stock just basically has to bounce. That's kind of a very lax description, and I apologize. I hand waved a lot of the description. We can talk about a washout long, a proper definition later. But essentially, the reason I took this trade for the washout long, basically I took it because HKD had dropped from about $50 a share down to about $27 a share at one point. And I now think the stock just wants to bounce. But this type of trade has basically not worked well in the last 8 months. And I've just been going in with smaller and smaller size each time. So over here, I will be the first to say I did not pick the best spot for my initial entry. I'm up $154 before I try this. It is honestly struggling here. I really should have not taken it, and then it kind of breaks out a bit. So I'm into the trade. I'm long several stocks now, and immediately HKD just dumps on me about $261. So already I'm losing kind of big money. It went from $34.88 down to $29. This is why I do not go into a washout long trade with huge size. This trade has not worked out well in most of 2022. And it's not a trade I'm particularly good at, or a setup I'm particularly good at anyway, but you have to leave a lot of wiggle room with this type of trade. Anyway, I am watching this a bit further, and this stock just refuses to bounce. We entered a period of no trading. We had a trading halt around 29. We have another one at 27, and it basically refuses to bounce. Now, I didn't really have a good opportunity to even get out of the trade. So I was like, okay, at this point, I took another 100 shares right around $23 and some cents. I can't even read that. 23 and change, and it just drops even further. So why did I take the trade? Well, this drop occurred in minutes. $36 down to $23. I just added 100 shares, negligible amount, with the hope that it has an immediate bounce back. I'm hoping it bounces back to 26 and I close out both my 100 shares as well as the misclicked 50. Instead, I kind of was like, okay, I started chickening out, and I think it just refused to. I've never seen a stock that performed this poorly on a washout long. Despite my size constantly dropping, this dropped as low as 19, and that's when I was like, okay, I had enough. I took off 50 shares, and it finally had its bounce. I managed to make I basically chickened out at this point, and I took off the rest of the shares at a pretty large loss. I think it was an $800 loss on the trade. And yeah, that's the thing with washout long. You guys saw how little size I had. I had maybe $3,000 invested in the washout long strategy, maybe a little bit more, but I lost almost, close to a third of what I put out on that trade, which is why I've been going in with washout longs, incredibly small size. And my other types of day trading, they're very small size compared to what I've been used to trading, but that's mainly because the market's totally different now, and you just have to be way more nimble than ever before. Anyway, I kind of am going to start doing these videos again, recollecting my trades and my thoughts on the overall market. I hope you guys enjoyed this video. These are the videos that take me the longest to do, and I've never figured out a way that I can make them entertaining for everyone to enjoy. Anyway, I hope you liked the video. If you did, please like and subscribe, and I will talk to you guys all soon. Thanks.
I just want the money.